Today we will be talking about the Q1 results of Punjab National Bank. So PNB has declared their Q1 results of the current financial year 2021-2022. So let's have a look at how the results have been for the bank, and we'll also look at the stock price recommendation based on their results. So let's start. If you look at the year-on-year comparison, which means we look at all the metrics for the current quarter and compare them with the previous year's same quarter. If you look at the net interest income, that has shown a 7% increase from 6781 crores to 7200 crores. If you look at the operating profit, that has shown a 16% improvement from 5200 crores last year to close to 6100 crores this year. If you look at the provisions is the amount of money that the bank sets aside, thinking that they might turn into non-performing assets and bad loans. That has actually shown a dip from 4800 crores last year to 3248 crores this year. That's a dip of 33%, which is a good sign for the bank. If you look at the net profit, that has shown a whopping 232% growth from only 308 crores last year to 1000 CR this year. So if you analyze all these results, the net interest income grew, the operating profit has grown, provisions have gone down, and profit has gone up. On all the four metrics, PNB has delivered good results. Now, I would also want to present the profitability ratios for the bank, because it seems from the results that the bank may be on the verge of a turnaround. Now, while we all know that the bank was marred by high NPAs and defaulters like Mehul Choksi and Nirav Modi, it's very important to understand how has the profitability levers been moving for the bank. So let's have a look at the return on assets, which means what is the total profit that the bank is generating divided by the total assets that the bank has. If you look at the previous year, the number was at 0.09%, which is now at 0.3%, which is a 233% growth on a year-on-year basis. If you look at the return on equity, now equity is the amount of money that the shareholders have put in the bank. It may be private shareholders like you, public shareholders like you and me, or it may be some private shareholders who have invested in the bank. Now the return on that money, which means the profit that the bank has generated this quarter divided by the total money that has been put into the bank, that has shown a 185% growth from 2.5% last year to 7.13% this year. Again, that's a huge achievement for the bank. The earnings per share, which means the profit generated by the bank divided by the total outstanding shares, that has also jumped by 188% from 0.33 rupees last year to 0.95 rupees this year. Now, all the profitability ratios that I've discussed here seem to suggest that the bank has in fact been showing a turnaround, and there's a possibility that it might recover to the levels that it had seen in 2017, which was close to 170 or 180 rupees. But the current market price is rupees 40 for this bank, and there's a reason that it has gone down to such low levels, and we'll come to that now. The biggest cause of concern in the quarterly results is the rise in net NPAs. So the NPAs for last quarter was 5.39%, and this is Q1 of the last year. For the last quarter, which was Q4 of the last year, it jumped to 5.73% from 5.39%. The current quarter, which is Q1 of FY 21-22, it has further jumped to 5.84%. Now, if I compare it on a year-on-year basis, the NPAs have jumped from 5.39% to 5.84%. Now, that's a significant jump of close to 0.45%, which is a good 9 to 10% increase in the NPAs of the bank. And this is the biggest concern that the bank has, that their asset quality just does not seem to improve. Now, a case in point is, if you look at similar numbers for the leading private sector banks of the country, let's have a look at those numbers. ICICI Bank has a net NPA of 1.16%, Axis at 1.2, Kotak at 1.28, and IndusInd Bank at 0.84%. Now, while this may not be an accurate comparison because these are the leading private sector banks, but this just goes to show what's the amount of improvement, what's the scope of improvement that PNB still has, because the number is at 5.84%. That's almost four and a half times the number of the other private sector banks. And that's why the cause of concern is there. If you look at the stock price recommendation, the current market price is rupees 40 for the bank. For me, I would, while the results in totality suggest that it might be ready for a turnaround, I would ideally want to control myself before I buy this stock. I would want to see the results of this particular bank for a quarter and see whether the bank is able to continue on its growth path. So the recommendation that I am giving for this particular bank is that it's good for buy only and only if the following three conditions are met. If the government starts recapitalizing the public sector banks, now the Indian government holds a 70% stake in Punjab National Bank. Now, given that the Punjab National Bank has such a high NPAs, it's very likely that the government starts infusing money in banks like Punjab National Bank or other banks where the NPAs are going up. So if the government starts to put in money into the bank, that's going to be a very positive signal for the bank. The second condition is seizure of assets of the defaulters. Now, while we are well aware of defaulters like Nirav Modi, Mehul Choksi, who have defaulted on thousands and thousands of crores of loans that they're taken from the bank, it's very important that if their assets are seized, then there will be a chance that that money might be recovered and the bank's books start to improve, which would mean that their asset quality is going to improve. So that net NPA number of 5.5% that we saw in the previous slide, that will improve if this starts to happen. And the final condition is there's a drastic reduction in NPAs. Apart from the fact that the big defaulters their assets are seized, it's important that their NPAs also see a drastic reduction. Only then, if these three conditions are satisfied, only then would I would suggest that one should think about buying this stock. So that's it from my end. For more of such quality content, please subscribe to the channel. Thank you.